It's a quiet Sunday afternoon. Margaret, a 68-year-old retired nurse in Pennsylvania, sits down at her kitchen table to open her mail. She sees a thick envelope from the Social Security Administration. Her hands are steady. She's expecting her usual benefit statement. She opens it. The letter says her Medicare Part B premium for 2026 will be $405.80 per month, not $202.90 like her neighbor pays. $405.80. Margaret reads it twice. Her stomach drops. She does the math in her head. That's an extra $200 a month, $2,400 more this year than she budgeted for, out of a fixed retirement income. She picks up the phone and calls her husband, Tom, who's in the garden. Tom, you need to come see this. Something is wrong with our Medicare. Tom comes inside, reads the letter, and looks up confused. Honey, this can't be right. We didn't make that much money last year. Then Margaret remembers. They sold their old rental property in 2024. The capital gains pushed their income way up, just for that 1 year. But Social Security doesn't know it was a one-time event. They just see the number on the tax return, and they're charging Margaret and Tom hundreds of dollars extra every single month for the entire year of 2026. If you've recently received a letter from Social Security telling you your Medicare premium is jumping, please don't go anywhere. Because what I'm about to share with you in the next few minutes could put thousands of dollars back in your pocket this year. I am Edward, a senior policy analyst here at Retire Right Decoded. For more than 10 years, I've helped retirees navigate the confusing rules buried inside Medicare, Social Security, and the tax code. The kind of rules that cost ordinary people thousands of dollars when they don't know about them. Today, I'm going to walk you through exactly what this Medicare premium increase is, why it's hitting so many seniors right now, and how a single official form called the SSA-44 can lower or even eliminate the surcharge if you qualify. And please stay with me until the very end, because there is one hidden mistake I see seniors make over and over when filing this form, a mistake that gets their appeal denied even when they truly qualify. If you don't know what to look for, you could leave thousands of dollars on the table. Let me tell you about Robert. Robert is 67. He retired last year from a manufacturing supervisor job in Ohio. He worked there for 38 years. In his final year of work, 2024, he earned about $145,000. He also cashed out some unused vacation time and took a small severance check. His total income on his 2024 tax return came to $158,000. Robert thought nothing of it. He was retiring. His income for 2026 would only be his pension and Social Security, totaling about $52,000 a year. Nothing fancy, nothing high income. Then in November 2025, the letter came. Social Security informed Robert that his 2026 Medicare Part B premium would be $405.80 a month. His Part D drug plan would add another $37.50 surcharge. Total extra cost, about $240 a month, or nearly $2,900 for the year. Robert was confused. He called Social Security. The representative explained the 2-year look-back rule. His 2026 premiums were based on his 2024 tax return when he was still working full-time. Robert asked, "But I'm not making that money anymore. I retired." The agent paused and then said something that changed Robert's life. "Sir, you may qualify to fix this. There's a form called SSA-44. Work stoppage is a life-changing event. You should file it right away." Robert hung up, downloaded the form from SSA.gov, attached his retirement letter from his employer, and mailed it in. 6 weeks later, he received a new determination letter. His 2026 Part B premium was reduced back down to the standard $202.90. He recovered every dollar of the surcharge for the year. But here's the part that haunts me. For every Robert who knows about Form SSA-44, there are dozens of retirees who never hear about it. They quietly pay the surcharge for an entire year, sometimes longer, because no one ever told them the form existed. So let me explain very clearly what's actually happening. The Income-Related Monthly Adjustment Amount, or IRMAA, is a mandatory surcharge that gets added to your standard Medicare Part B and Part D premiums when your income exceeds certain thresholds. It is required by federal law under Sections 1839 and 1860D of the Social Security Act. It is calculated by the Social Security Administration using income data they receive directly from the IRS. Here's the part that catches almost everyone off guard. IRMAA uses a 2-year lookback. Here, your 2026 Medicare premiums are based on your 2024 Modified Adjusted Gross Income, or MAGI. That's your adjusted gross income from line 11 of your Form 1040, plus your tax-exempt interest from line 2A. Now let's look at the numbers for 2026. The standard Part B premium is $202.90 per month. That's what most retirees pay. The annual Part B deductible is $283. But here's where the surcharge kicks in. If you filed as an individual in 2024 and your MAGI was between $109,001 and $137,000, your 2026 Part B premium jumps to $284.10. If your individual MAGI was between $137,001 and $171,000, your premium becomes $405.80. Between $171,001 and $205,000, it's $527.50. Between $205,001 and just under $500,000, it's $649.20. And at $500,000 or above, the top bracket, your Part B premium is $689.90 a month. That's $487 more per month than the standard rate. For married couples filing jointly, the brackets start at $218,000 and double from there. And there's more. Part D drug coverage has its own IRMAA surcharge, ranging from $14.50 up to $91,000 a month, on top of whatever your Part D plan already costs. Combined, a senior in the top bracket pays nearly $578 extra per month per person. For a married couple, that's over $13,800 in extra Medicare premiums every single year. This is real money. Money that comes straight out of your Social Security check. Money that wasn't in your retirement budget. Now here is the protection that most seniors don't know about. Form SSA-44 is the official Social Security form titled Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. It allows you to request that Social Security use a more recent tax year instead of 2024 when calculating your IRMAA if you've experienced a qualifying life event that reduced your income. There are exactly 8 life-changing events that the Social Security Administration officially recognizes. Write these down. Number 1, marriage. Number 2, divorce or annulment. Number 3, death of your spouse. Number 4, work stoppage. This includes retirement, being laid off, or selling your business. Number 5, work reduction, like going from full-time to part-time. Number 6, loss of income-producing property, but only if it was due to a disaster, theft, arson, or fraud, not from a voluntary sale. Number 7, loss of pension income, only if it's from a defined benefit or cash balance pension that failed, terminated, or was reorganized. Number 8, employer settlement payment due to your employer's bankruptcy or reorganization. If any of these 8 events happen to you, you may qualify to lower your IRMAA right now. But please listen carefully, because here come the traps. These are the mistakes I see seniors make every single week. The first trap is believing a one-time income spike qualifies. It does not. Selling your house and getting capital gains, doing a Roth conversion, taking a large IRA withdrawal, selling stocks for profit. None of these are qualifying life events under SSA-44. AARP confirms this directly. If your only issue is a one-time spike, you simply pay the surcharge for 1 year, and it resets automatically the following year when Social Security gets your next tax return. The second trap is filing the form too early or for the wrong year. The life-changing event must have occurred in the same year or earlier than the tax year you want Social Security to use. Get the dates wrong and your appeal will be denied. The third trap is confusing loss of pension income with normal pension drawdowns. The official rule is very specific. The pension must be a traditional defined benefit plan or a cash balance plan, and the loss must result from the plan itself failing, terminating, or being reorganized. Running out of payments on an annuity you chose, drawing down your 401k, or pulling from your IRA does not qualify. The fourth trap is thinking IRMAA is permanent. It is not. It's recalculated every year based on the most recent tax return Social Security receives from the IRS. If your income drops in 2025, your 2027 premium will automatically return to the standard amount. You don't need to do anything for that to happen. The fifth trap is missing the appeal deadline if your SSA-44 is denied. You have 60 days from receipt of the denial to request a reconsideration. Then another 60 days to request a hearing before an administrative law judge. Miss those deadlines, and you lose your right to appeal forever. And the sixth trap, the one that quietly steals the most money, is forgetting that Part D IRMAA also applies. Most seniors focus only on Part B and ignore the extra surcharge on their drug plan. That's up to $91 a month being silently deducted that you may not even notice. Now let me give you the 3 exact actions you should take this week. Please grab a pen. Step 1. Pull out your most recent Social Security letter and confirm what you're being charged. The letter that came in October or November of last year tells you exactly what your 2026 premiums are. Compare that number to the standard $202.90. If you're being charged more, you're paying IRMAA. Then think back. Did any of the 8 life-changing events happen to you in 2024 or 2025? Retirement counts, job loss counts, death of a spouse counts, divorce counts. If yes, you almost certainly qualify for relief. Step 2. Download Form SSA-44 directly from the official source. Go to ssa.gov, then Forms, then search for SSA-44. The form is free. Never pay anyone to give you this form. The instructions are on pages 5 through 8. Fill out all 5 steps carefully. In step 1, check exactly one life-changing event and write the date it happened. In step 2, write your estimated income for the more recent tax year. In step 4, attach your documentation. For retirement, that's a letter from your former employer. For death of a spouse, a certified death certificate. For divorce, the divorce decree. Then sign and date it under Step 5. Step 3. Submit the form correctly and follow up. You can mail or fax it to your local Social Security office, or you can hand deliver it. Keep a copy for your own records. After about 30 to 60 days, you should receive a new determination letter. If your appeal is approved, your premium will drop, and any overpayment will typically be refunded through your Social Security deposits. If you're denied, you have 60 days to request reconsideration. Don't give up at the first denial. Many appeals are denied at the first level and approved on reconsideration when better evidence is submitted. If you need help, do not pay a private company. Call Social Security directly at 1-800-772-1213 or contact your local state health insurance assistance program called SHIP at shiphelp.org. Both services are completely free. Now here is the hidden mistake I promised you at the beginning of this video. Many seniors download Form SSA-44, fill it out perfectly, and submit it on time, but they get denied anyway. Why? Because they tried to use a non-qualifying event. They listed sold my house, or did a Roth conversion, or took my required minimum distribution as the life-changing event. None of these qualify, no matter how much they hurt your tax return. If your only issue is a one-time income event that doesn't fall into the 8 official categories, do not file SSA-44. Filing a denied form takes time, creates frustration, and worst of all, can make you think there's no way out. There is. Your IRMAA will reset automatically the year after the spike falls off your 2-year lookback. Just be patient and budget for that 1 year of higher premiums. But if you did experience a real life-changing event, retirement, job loss, divorce, death of a spouse, and you haven't filed SSA-44 yet, please do not wait another month. Every month you delay is potentially hundreds of dollars lost, money that belongs in your pocket, not in the federal treasury. And remember, do not rely only on YouTube notifications for important updates like this one. The algorithm is unpredictable. Videos like this one get buried under noise. Rules change quietly. The people who profit from your confusion are counting on you not knowing the difference. If you want to stay protected, click the link in the description below and join the Global Senior Alerts official WhatsApp channel. When you join, you'll get instant access to a free downloadable guide called the Senior Benefits Protection Guide. It walks you through exactly how to file Form SSA-44, how to appeal a denial, and how to protect every dollar of your Social Security and Medicare benefits. You'll also get real-time alerts about new rule changes affecting Social Security, pensions, bank rules, insurance policies, and travel regulations the moment they happen, so you're never caught off guard again. Here at Retire Right Decoded, my job is to make sure no rule, no penalty, and no government form ever catches you off guard. If this video helped you understand what IRMAA really is and how to fight back, please share it with another retiree who may have just opened that scary letter from Social Security. You may save them thousands of dollars and weeks of worry. I'm Edward. Take care of yourself. Take care of the retirement you spent a lifetime earning. And I'll see you in the next one.